What is up, guys? It's Blake here. We are going to do a quick trade recap. It is Wednesday, March 4th, and we had a very active day today in the stock market. So basically the point with this video is I want you guys to understand, where my thought process is, what I'm seeing in the market, because as you guys know, the service is not just about my trades, it's about helping you become a better investor. So we talked about the 200 SMA a lot over the past couple days, and the key level that we've been watching is this 304.7 area, and you'll notice that it does vary a little bit because it is a moving average. So today the level was 304.7. So that was the level that we were watching. So yesterday what happened was we closed below the 20-day moving average and we closed near the lows of the day. So that to me was a signal that markets wanted to remain selling, still in the downtrend, and don't fight the trend. So we took some puts out on SPXL. Now overnight the market gapped up and it did gap above the 200-day moving average. I let everybody know, hey, if the market starts to hold this 304.70 area, then I'll likely flip my position. So that's exactly what happened today. Now we did get shaken out once, but that was because the market gave me the signal. When you enter into a trade, you need to know the points as to where you will get out of that trade. Now, if I'm in a losing trade and I've already have a signal to get out of the market, to get out of the trade, I don't waste my time, saying, oh, let me just wait till the end of the day. No, I don't wait around for that kind of stuff. That kind of stuff can really put you in a bad position, especially if you have on a lot of position sizing. It can really go south quickly, especially with the volatility where it's been. So what I was looking at was this 200-day moving average. The SPY held it, and then towards the middle of the day, it started to push higher. So one of the things that I've been watching is the 4-hour chart. And I like to watch the 4-hour chart because it gives me a little bit of an early cue when the trend begins to change. Now, we all know that for our rules to trade is on a daily time frame and a 2-day close above the 10 SMA. So what we had here is rules to trade RT on a 4-hour chart. So we had one candle pierce above and break and close above the 10-period SMA. And then what we're looking for is price strength confirmation. And price strength confirmation just means that there's another candle that closes above this candle's high that broke the plane of the 10 SMA. So we got that follow through today. We were looking at the 309 area and specifically 309.16. So that was a level that I was watching very closely. And once we started to look like we wanted to close above that level, I went ahead and said, hey, we have rules to trade on a 4-hour chart. I'm getting in early in this trend. And look at what you notice. So we have a break of the 10 SMA, close above, and then price strength confirmation on today's candle on the 4-hour chart with a MACD bullish crossover. For me, that's good enough to go ahead and take a trade. Now, does it meet our rules to trade on a daily time frame? Absolutely not. You can see that we are just butting up right up against this 10 SMA. Actually, the 10 SMA is at 313.30, and we closed at 313.05. So we're right next to that 10 SMA on the S&P 500. Now, if you notice, our position is actually in the NASDAQ, and the NASDAQ is a little bit stronger than the S&P 500 right now. And the NASDAQ actually did close above the 10 SMA. So 10 SMA on the daily time frame is 217.39, and we closed at 218.22. So this is technically now what we would consider no trend. And no trend is when there's no clear direction up or down, but we know on a 4-hour chart, we do have rules to trade on a 4-hour chart. So that's why I am in QQQ. We are extremely early in the trend. I will look to add more. And here we go. Is the 4-hour chart. Here's the candle that broke above and closed. And then we need price strength confirmation above this candle's high. And we got that here today on this candle. So that's the 4-hour chart. That's what I've really been keeping a close eye on, along with the 200-day moving average on the SPY, the S&P 500. So what can we expect from here? Well, you guys do know we do have some stops below, but I'll be close to monitor that this trade doesn't turn negative for us. It's one of the things you don't want to do is let a positive trade turn into a negative trade. But really what I'm going to be watching is this candle's low and the 200-day moving average. We've got 6 weeks on these QQQ calls. They are already almost $4 in the money. So there is some intrinsic value in those options that we have. And that's basically what I wanted to explain today. We are buying this dip. We are not in an uptrend. So that's the day's trade. Hope you guys found this video useful, and I'll see you again tomorrow.